There have been interesting developments in the cable industry in recent weeks. John Malone's Liberty Media closed its $2.6 billion investment in Charter Communications. Meanwhile, we've also seen many of the large cable companies show continued growth in commercial services, which has long been a stronghold of telecoms like AT&T and Verizon. Joining me now to talk about these trends and whether they are coincidences or not is Neil Begley of Moody's.
Hey Chris, thanks for having me on the deal.
Well, thanks for joining us. So Neil, would you talk about this? I mean, what do you think how important is it for cable operators to grow in commercial services?
It's of the utmost importance right now. Residential services, the triple play video, HSD, voice products are getting to the point as a group where growth is much more limited and will continue to moderate in areas even where high-speed data is the premier product. I think that the remaining growth for these companies now, the primary growth vehicle, is now coming from commercial services.
We saw Time Warner Cable, Charter, Comcast have gains of 20% or more in this quarter. Cablevision struggled a little with single-digit gains. What are the big challenges for these companies as they stake out their claim in this new market?
Well, it's a capital-intensive business. It's an industry in which is already served by telecom companies, but these telecom companies have very efficient footprints. And the issue for some cable companies, the smaller ones that don't have either the scale or don't have the efficient, contiguous market footprint, it'll be more difficult as they move up market to service those customers and the multiple locations that they have. For larger cable companies like Time Warner Cable and Comcast, they already have equivalent sizes as a lot of the telecom companies they compete against, so they're having a better time with it. And as you mentioned, they have higher growth rates currently.
So do you see consolidation playing out over the next 5 or 10 years in this area?
Yeah, I think that time frame is exactly the period in which we think there'll be major consolidation. We think that the 2 dominant players now will turn into possibly 3 or 4 dominant players within the next 5 to 10 years. We think that the driving factor for that consolidation is the commercial business. It's what's driving their EBITDA growth, and it's what ultimately will drive their ability to leverage EBITDA growth to continue to buy back shares and pay dividends.
Now, you have an interesting statistic that you've come up with for gauging these cable operators and how built out their footprints are. Would you talk about that a little bit?
Certainly. If you look at AT&T and Verizon, they both have 40 or more % penetration in the states in which they operate in terms of their network passings. If you look at the cable industry, you see a much different footprint. In fact, if you looked at the map of the United States, what you would see is a jigsaw puzzle of coverage. And so unless you have enough scale, enough contiguous network within a market, it's more difficult for you to service those customers. So there are certain companies that have a competitive dynamic with AT&T and Verizon, have over 40%, companies like Time Warner Cable and Comcast, but there are a bunch of other mid-sized players which have less than 20%. We think those are the companies like Sequel, like Cox, and like Charter, where we think that they will have a more limited long-term opportunity in the commercial space unless they can increase that efficiency of their network within the states they operate.
Well, just for the record, so Charter declined to comment on this matter. Cox and Sequel both said that they have multi-billion-dollar commercial opportunities in their footprints, and they didn't see a need to consolidate to access that. Do you think that they can fully achieve their potential in those markets?
I think potential is the key word here. I think there is a lot of growth still ahead of them. That's why we talk about 5 to 10 years out. Okay. They're basically starting with the smallest commercial customers right now, the doctors and lawyers and small businesses that mostly have a single or maybe 2 locations. But as you move up market and you're talking about multiple locations within a market or perhaps within a state, that's where it'll become more challenging, where their ability to service them with just their own network will become more challenging. There is a possibility, however, they could partner up. However, if you look at the history of partnerships and joint ventures among cable players, it's littered with debris of broken promises and broken agreements. So my confidence there is somewhat more limited.
And then I guess the big question is, with John Malone entering Charter, whether the stage is set for some of these deals to happen.